Hi everyone, my name is Piterpakulski. Today we will continue building financial model of a street food chain. And today we have to give an answer to the first very important question which every business starter asks himself. How much financing do we need to start the business? And today we'll be creating the algorithm for calculation of amount financing needed for the business. I will be doing it from scratch. If you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. So let's start. First of all, to calculate the amount of financing, to cook this parameter, we need first of all the whole financial model done. So we need to calculate first of all the revenues, expenses. We have to calculate direct expenses, salaries. We have to consolidate all the inflows and outflows. We put all the inflows and outflows into the cash flow statement. So to calculate the amount of financing needed, we need the cash flow statement be done. And when the cash flow statement is done, we are looking at the last line of the cash flow. It is cash balance at the end of the period. And if we see here negative values like here, this means that we don't have enough money to, we need to finance these losses. So this is called cash gap. If somewhere inside the timeline of your business, inside the cash flow statement, in cash balance at the end of the period, you will be able to see the negative value. This means that you don't have enough money to finance the business. You have to take a loan, you have to, for example, put some money from your pocket or your business partner's pocket or investor, so whoever. And we need to compensate these losses. And we have different pockets that we are using to compensate these losses. So this is equity. So for example, this is our money, and we have a loan. So first of all, let's look at scenario with loan. So we are just going here and looking at this value and typing here this value with an opposite sign. So this 0 disappears. Then I do the same exercise here, and I'm going monthly along the cash flow statement. So here I need, then I need this amount, and here is the last month with a cash gap. Let me add a little bit so we can go further. And here we see that we don't, these values are all positive, and this means that we don't need some additional financing of our business idea. So we can go to the end of our timeline, create the totals for this line, and this will be the total amount of money that we need to start this scenario of your business idea. So this is the case where when only your money is used, your own money is used to start the business. So this is the first the first scenario. The second scenario is when, for example, you have a loan. So here we specify the term of loan, interest rate, grace period for interest payments and principal payments. Here we specify when we take this loan. So here it is. Then we're looking as usually at the last line of cash flow statement. Here we can see how so we still have a cash gap, and we need to, for example, we don't have an opportunity to take one more loan, and here we, for example, add $2 million of our money. We still have cash gap here, so let it be we need to put this amount here, and then the project starts generating its own cash. If we go to the end of the timeline, we will be able to see that we need this amount of money from our pocket. If we have this amount of loan and we need this, and we are taking this loan, so the total amount of financing will be this value. So if we go to the bottom of the cash flow statement, we can create a simple table. We can create type of financing. So this will be equity loan. Type of financing. So this will be a very simple table that will show us the structure of financing and the total financing. Total financing needed. So this will be this plus this. The value will be pulled from the end of the timeline. But now I would like to cover one more story. For example, when your business model is ready, you see the profitability of your business idea, you see the revenues, and 100% you will start creating a lot of scenarios, lots and lots of scenarios. You will do 10, 20, 30, 40 scenarios because it is your business idea. You will dive into the way how this or that financial efficiency parameter, input parameter affects your business idea. And in each case, you will have to adjust the amount of equity that you need, loan amount. This will be a crazy story because you will have to manually go over the cash flow statement, specifying all these necessary financing manually. So this will be a hard story for you. To avoid this, you can automate the process of calculating the amount of financing needed, and I will show you how you can do that. So first of all, let's make zeros here. We can see 0 here. Let's create a table after the financing needed table. So this will be financing needed table. So what I will do, so I will calculate the revenues from operating activity, the result from operating activity plus the result from investment activity plus loan minus principal payments minus interest payments. Then I will extrapolate this formula to the right, and then I will make this formula cumulative, adding the previous value. Then I extrapolated this formula to the right, and here I can see the negative values. Here they are. And now I will search the minimum value inside the time horizon of our business idea. This is it. Then I go to the beginning of the timeline, press equals, then minus, and then use this value with an opposite sign. So here you can see minus. Then I press enter. And here we can see mathematical zero that shows us how much money exactly do we need to start the business in this particular case. And now we don't need to type values here manually. For example, we just want to look at other scenario of business development. For example, we are taking just $1 million loan. So we can see here how numbers changed, the totals changed. This is mathematical zero. So this is mathematical zero. And for example, we can increase the amount of loan. You can see zero here, so we don't have cash gaps. And now if you start creating numerous amounts of scenarios, adjusting these investment, revenues, average checks, the way you're gonna open spots inside your street food chain, you will easily be able to see how the amount of financing needed changes. If you get this amount of loan, the amount of equity that you need will automatically be adjusted, and you will see the final financing here, and you won't have to manually retype the data here. So this saves you a lot of time and you are not making mistakes. So this is the quickest way to calculate the amount of money needed for your business idea. So I hope you enjoyed this video. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you and bye.